Good day, traders. I trust you are well. Welcome to Price Action Profits from the Asian Open. As I mentioned in my video of last week, we are looking at transitioning this Price Action Profits to a subscription-based program coming into the new year, 2025. The pure focus is on these markets, on my watch list, and looking at some of the best price action setups during the Asian morning session. So you still get the free videos as we go through until the end of the year. I trust you enjoy them. Any feedback is welcome. This week, I'm looking at Hang Seng 50, 22nd of November. Interesting open, I think really quite fascinating and pretty common. In different variations, of course, and that's the beauty of the market. Nothing is fixed, but if you get your mind around the possibility of the variations around this, a common theme, I think you'll be pretty fine. Trading range at the open is reasonably common. We had one here. That was the first candle of the session. Failed breakout. Bull candle, good, tails on top, alarm bells for you. This is the first candle. The bulls are strong. They got to be buying aggressively and closing near the top with no tails, which increases the probability. Tail on top is a bit of a problem, so best to wait. Don't do anything. Let's get a little bit more information. Second candle, failed breakout, good bull candle at some stage, but best to control of it. And then we went into a trading range. Why do I call it a trading range? Well, this is a low of the first candle, and we're already gone 3, 6, 8, 9 candles already into the market open, and already we are seeing that the bears are failing to break out beneath here at this point. So when you get this breakout pullback low one, it is a bear breakout pullback low one, but we are still within the trading range. At this low of the first session been a little bit higher, and the bears broken beneath that low with a higher probability. So I call it low probability in a trading range. If you want to buy it on the premise that the bears might be strong enough after failing the bulls breaking out above here, then you can do that. But you need to put a wide stop. You can't just put a stop here because you're buying within a trading range. In the middle of a trading range, it's likely to fail. But so it's low. It's a breakout pullback low one, but it's a low probability trade. Then we have a breakout here. You could take a breakout trade here and then market, because the tail is a concern for me. If I'm taking any breakout trade, I want it to close as low as possible. But you could take that. Again, bear in mind you're taking low probability, but you're assuming it's a breakout. Use a wide stop. Bears at weak follow through from that breakout, and bulls came. And at that point, before all of this took place, the bulls had an opportunity to accelerate up or go into a trading range, went into a trading range, but they did not control the trading range. We had a decent enough breakout beneath here. So there's another opportunity. Second trading range at the open, bit tighter than the first one. Still the same forces controlling the large trading range as the same forces controlling the tight trading range. Doesn't mean that because this is larger, there is more volume here than here. It's still the bulls and bears equally balanced, fighting it out. Bears now breaking out. You could reason for yourself that you could take that trade, and if the market fails here, you get out, a break even, or depending where you put your stop, maybe 0.5 to 1 or 1 to 1. It's a trading range trade, so you're not expecting much in here, but probably higher probability at this stage than we had that trade. So you could take that stop, and if you take that, remember you can get stopped out more often because you're taking an early trade, or you wait for confirmation. Market is broken out, confirmation, higher probability, a little bit more, and that's what we got a little bit later on. So pretty common structure at the open of the day open of here's Hang Seng 50 open of this market. And remember, because we're looking at the open, once you determine and decide when exchange opens, like Nikkei 225, look at where it presently opens. It's midnight GMT, 2 a.m. my time, which I think is 8 a.m. Singapore. That's where you start looking at the open of that particular exchange. Then look at what the market is doing for you. If we trade in currencies, we have currencies. I use the open of an exchange as a marker, but the markets are open 24/7. So if I'm trading, we've got New Zealand yen or Aussie yen in our markets. I just look at when Nikkei 225, then I want to be active opens. That's when I want to be active in the market through even the open of the Hang Seng. When Hang Seng opens, there's more volumes coming in into the markets. And here we're trading up to the close of the morning session of the Hang Seng. You can determine what your morning session is, but that's like the kind of market that we are using. So I hope you found this insightful, and we will catch up again next week. Take care and happy and profitable trading. This is George Nyabadza, price session trader. Bye-bye.